Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of The Trading Floor with your humble host, Angie Barbosa, Chris Irwin, and Jeremy Alexander Newton with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. Boys and girls, hope you guys are doing great. Got ourselves a little bit of a market today to check out. A little bit of a black candle, out of resistance, not a massive surprise, right? Still chilling on the DIA. Still waiting to see what's going on. We got ourselves a black candle today. So, tomorrow, I think if we do get ourselves a nice little bullish move and we close above, great. Otherwise, we'll probably just trade sideways a little bit longer. This bear call spread up here, the 182, 183 bear call spread expiring this week, that will likely expire if it does not close above 181.90. If we do make it back down to here, great, I'll buy it, but likely it looks like the DIA and the market in general probably grind a little bit sideways, and it might look something like this. Still bullish, of course, but DIA looks good. I don't really have anything else to say on the DIA. We got the buy zone, we got the May bull put spread way down here, the 168, 167. Bloody Wednesday is coming up. I think that's this Wednesday. So we'll see what that does. And see if the FOMC meeting comes out and says anything or does anything. Maybe we get a little bit of selling, and if we do, and the FOMC meeting causes the market to pull back down, at least the DIA to pull back down to 173, all right, sweet. If not, we'll stick in there and see what happens. SPY, still looking for a place to go long on the SPY, and we, still haven't just really gotten a good close above where I want to. So on Thursday, we didn't get a close of my entry on Thursday. On Friday, we had an inside day candle. So I guess at this moment in time, I'll have an entry. This is another all-time high close above 212.62. And my overall thought is, if we do close above there, right, then I want some type of retest, because this market's been very, very retest friendly. It's not been very breakout friendly. So in that particular regards, my overall thought is, if we do pull back a little bit on the SPY to maybe 209, that could present a good buying opportunity, and just keeping a close eye on it, see what it does. But overall, I'm still kind of bullish. Wait and see what goes down. Here's the Q. So we got an actual debit spread expiring this Friday on the Q. So we're in bullish. The Qs got treated in bullish as of the 9th, I think. Yeah, 9th of April. So they've been moving up very, very nicely, very handsomely. And the 110 call expires this Friday. So this is a retest gap where I kind of do anticipate the Qs to pull back just a little bit, bounce off the moving averages, and then continue higher. Really and truly, I do have the 120 as a target kind of in my mind. I think there is the chance that we could get up there by the end of the year. I don't think that would be a massive shock to me. Volume is increasing nicely the last 2 days. Today is kind of a lower volume day. So really kind of a pullback and a bounce in the market in general. And I would be relatively bullish. The IWM, nice little black candle today. So again, do we start getting some pullbacks this week, and can we buy? And if so, great. We still, as I mentioned, we had this little triangle pattern, just never really broke out of that either. So, man, maybe it's just going to be grind city, and it really won't be that exciting. There's a very good opportunity that could happen, but we'll make the best of it. We'll look at some merchant stocks today. Obviously, Merchant Monday. Tomorrow going to be Tech Giant Tuesday, and it's going to be a very, very busy day tomorrow. So I'm hoping my voice gets a little bit better. I'm not sick at all. I don't feel sick. My body hurts. My body feels like I got ran over by a train, but if it was any train at all, it would have been a Long Island train, if you know what I'm saying. So I guess my voice is just it's a little hoarse from the celebrations of the weekend. This weekend will be a big weekend. My 27th birthday, Manny Pacquiao, Floyd Mayweather fight, Kentucky Derby. Going to a April, as you guys know, is in real life trading land, is do something you've never done before month. So April 30th, I'm going to the Nashville Symphony. I'll do a write up on that, somewhere that I've never been. Well, never experienced, which I'm excited about. We'll see how it transpires, what goes down. But have you guys done anything this month that you've never done before? May, so that you guys can go ahead and get a preparedness start. May is going to be health and wellness month. So we're going to talk about health and wellness as it relates to trading and as it relates to you guys. Maybe come up with a health goal or two. Maybe something to do in May. Get some of your summer bodies ready to go, especially my traders out in the world. That's what we focus on, right? This is, of course, real life. So I'll do a little bit of an article about the Symphony. I'm excited about that. That's going to be on April 30th. I guess it's really an update for the week. But tomorrow, you have Apple. Apple is going to be the talk of the town tomorrow. We trade up to a resistance level. Here's the resistance, previous all-time high. And we're getting a black candle today. So it's actually a good thing that we're getting a black candle because I still want some people to be trapped on earnings. On Apple, the fact that we closed above 130.35, I did have a few traders get in bullish and reap a little bit of the rewards today as we gapped up a little bit and trade to that resistance as a target. Our April 120 week 4 put sale expired worthless last Friday. So good for you guys. And again, here's still my earnings plan. So at this moment, if Apple gaps above 134, if Apple gaps down but opens above 119, I'm a buyer, still on that board. And if Apple gaps down and opens below 118, I'm more bearish and bullish, waiting to buy around 104. That's kind of my thoughts at the moment on Apple. Now, I did have a student, a friend, text me just a moment ago, and she said, hey, I have a question. I have 10 Apple June 125 calls that I bought at 650. So let's go check out where those are right now. So June, that's a good thing. First of all, June's a lot of time. I like that. So June, let's go over here to options. Let's see how much they're valued at because they should be valued more than 650. Let's come over to June expiration. June 125 calls. Beautiful. Okay, so right now they're about $9.50. So the question is, I bought 10 Apple 120 puts expiring this Friday for 35 cents. So 10's 120 right down here. First and foremost, I love that plan. I think it's a great plan. I'm really happy that my friend is protecting herself over earnings. That's a thumbs up, right? Because we do not know what it's going to do over earnings. If Apple opens, like I said, really perfectly, if it opens about from 134 to 136, hang on to your T-shirts, Mike Tyson. I don't know what that means. I'm bullish if Apple opens above there, I guess is what I'm trying to say. I tried to come up with a good metaphor, and I just failed. Apple will say to the world, hey, watch this. That's probably what will happen. If it opens above that price, really, really good bullish move because anyone who went short there and anyone who went short yesterday will be trapped. It will be continuing the bullish trend. So I would hang on to that. And then if the 120 puts will pretty much be worthless, just let them expire and go to option heaven. If Apple gaps down to about 124, I think actually some buyers will probably come in because, again, same people who bought down at the 50 before will probably want to buy again. So if it does gap down, you can look and see how much your put options are worth. They probably won't be worth a lot at all since they're expiring this week. So really, for your 120 puts, I would hang on to them in all aspects, regardless of how it gaps. Right? So if Apple gaps down to here, to let's say 119 and starts trading down, I would hold on to them. I would probably exit your calls at that point because if it gaps down below 120, Apple is not going to be, and I will say this one more time, if Apple gaps below 120, Apple will not be above 125 by June. So I do not want you to lose all of your investment in that example. Just kind of my thought. So really, if it were me personally, and I had, again, this is just my personal opinion. I think Apple's gapped up a few times over earnings in the past. I think it's going to gap down this particular earnings. I could be wrong. I think there's a 70% chance that it gaps down, but if it gaps up, great. If it gaps down, it's a very small gap down, like anywhere between 124 and 130. It'll probably get bought. If I had bought that many calls at 650 and they're at 950 right now, that's a $3 gain. That's a $3,000 profit. If it were me personally, I would take the profit. I would lock in my profit. Done. Hold on to my 120 calls as a protection. And if Apple opens above 134 and below 135, I would buy more calls, either probably late June or sometime in July, and hang on to about 150. If it gapped above 136, opens above 136, I would let it pull back just a little bit intraday and then buy late June or July calls. That would be my personal preference. That's what I would do. Jay said, so you would exit and re-enter after earnings extending time. Yep. That's what I would do. If I was in that exact trade myself, because you're up $3.50. I mean, you're at a profit. So going into earnings with a profit and not taking at least some of it doesn't really make sense to me, because it could you have a 50% chance that it gaps down. And if it gaps down, this becomes a battlefield, and we're probably going to do something like this for another 3-4 months. So you could sell half, you could sell most, you could sell 9 of them. Since you're an investment, I think an investment was probably $6,000. If you sold most of them and just left $1,000 worth of calls, which would be 2. So if you sold 8 and left 2, then the 2 would kind of be house money. That's also a choice. So we'll see. I think Apple, if it was me personally, I was in the exact same position. I would take the profit without question, and on the gap up, I'd buy some more. If it gaps up. That'd just be me. If you had June, yeah, I would sell 8. If I had 10, I would sell 8 and hold 2 just in case. Also, since 120 is a very, very strong support, I would probably consider selling 119 or 118 puts to offset the cost of the put that you bought. So, for example, let's say you can bring in 12 cents on the 118 put. You create a bear put spread, and I don't think Apple's going to gap down below 120. I actually give that, you can hear that here first on the recording, I give that a 1% chance that happens, that Apple gaps down below 120. I will eat some broccoli on a webcam tomorrow if Apple opens below 120. What do you guys think about that? If Apple opens below 120, I'm eating some broccoli for you guys tomorrow. Raw broccoli. Nothing on it. It's not a horrible pain, but it's not that great. No, just the broccoli. During break, I actually made like a broccoli chicken casserole. I don't know if it's going to be good or not. You guys tell me if it's going to be good. I took chicken, I put broccoli on top of it, covered it in pasta sauce, and sprinkled it with cheese. Does that sound good? It's like a broccoli chicken parmesan. I don't know if it's going to be good. We're going to find out. Jay says Apple 118 can be bought for the same price I bought the 120. I wouldn't buy the 118. I would sell the 118. Since you already bought the 120, I would sell the 118, creating a bear put spread, a $2 bear put spread. So yeah, if you can do that, I mean, bottom line is you're creating a maximum return. So your best case scenario is Apple trades down to 118 and you make $2. That's best case scenario. You make $2 on the trade. It's marinara sauce. Yeah, so Jay, if you want it, you can feel free to try that. Otherwise, we'll see what Apple does tomorrow, guys. It's gonna be the talk of the town, that's for sure. We'll find out. Gonna be fun. Neil says raw broccoli sounds good. I may have some for dinner tonight. All right. What else to check out here for Merchant Monday? So that's just the big one. I mean, we'll look at Facebook as well. We're going to look at this one more tomorrow. Facebook, 78 May put sale. That's all I got for it right now. 40 cents. Otherwise, strong support around 80.74. Resistance around 85.50. And now I'm just going to wait on Facebook to see what it does. I'll keep a close eye on it and just wait and see. Probably going to trade sideways, not do really much of anything. Walmart. And Walmart has earnings, if I'm not mistaken. So Merchant Monday, we're going to go look at some merchant companies. If there's anything you guys want to look at, let me know. Walmart apparently doesn't have it until 5/19. So it's a little bit of time. So we right now are in a collar on Walmart. Dollar cost average is 78.48. I don't really have any trade on Walmart at all. Nothing looks pretty. I guess we're going to move on. RAD, Rite Aid Corporation. We say let's watch for a bounce off the 100 simple moving average. There's the 100 simple moving average, and 759 will be a little bit of a support. So let's see if it does it. Made a higher high, came down. Let's watch for a bounce. As of right now, I'd just kind of wait, and I would wait. Not really super exciting. So Rite Aid, beautiful. Walgreens, that's no longer a ticker. Walgreens Boots and Alliance. So it's at 86.35. We had a bunch of black candles. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 black candles in a row on a daily chart, which is wild. So I give that a 90% chance tomorrow we gap up. Or I'm sorry, we get a white candle tomorrow. 90% chance on Walgreens. So for my day traders or short swing traders, keep an eye on Walgreens tomorrow. Any type of gap up or nice move, and it'll probably be a little bit bullish. Especially if we gap up above 86, 88, 87.30, or 88.56. But we do have a put sale that expires this Friday. $86 put sale. We did break out the pennant. We did trade down a little bit bearish, and we'll see what it does from here. So Walgreens Boots, there we go. Okay, Target. So Target Corporation did pull back a little bit. Again, I still think it's going to. Here's kind of my thoughts. Like, just this trend looked too continuous without any wave rotation of any kind to talk about. So I'm imagining that Target's probably going to do something like this. I don't think it's going to quote unquote double top, but I would wait for it to come down to the 100 to buy it again. Let's just see if there's any premium up there. I don't think there's going to be, but we can check. Options. Let's come over here and look at this, and I'll come over here and see when earnings is going to be on Target. Most merchants are a little bit later than some of the techs. So 520. By the way, guys, our AMAT trades at 1968 right now. Doing very well. 520, okay. So let's do calls. Let's see what we got. 84 or 85 calls. May expiration. 84, 85, we could get... Oh, that's not that bad. 84, 85. It's a little too tight, though. We might be able to do 85, 86. No. Okay, what about 84? 84, 85. You can get 40 cents and you can get 22 cents. That's 18% return. May expiration. 84, 85. Let me just see how the Bollinger Bands look. See if we did not get into the top of them again. All right, we didn't. So we got into here, came up, and we're failing again. A little bit of a bearish reversal too. Okay. 84, 85, 18-cent limit. Bear call spread. Analysis on 4/27/15. Newsom is going with the fact, going with the sentiment that Target needs to retrace a bit. Retrace a bit and consolidate. Yeah, that's really about it. It's a little bit of an aggressive entry. But based on today's candle, I like it. Based on this 3 candle pattern right there, I dig it. And since it's May, we would know when we would need to unravel. And more or less, if it closes above our spread, we unravel. Since we're getting 18 cents, if it closes above 84.04, that's our issue. Will not even look at spread unless it closes above. Could consider buying back this spread soon if target really tumbles. So if we're getting 18 cents right now, if target really just kind of retraces, you know, like let's say it does this, and we can buy this back for like 6 cents by Friday, I don't think that will happen, but I'm just saying if it does, I would buy it back because it's a pretty good premium. Bear call spread, target in a distribution phase. We haven't done a trade on target in forever. The stand says weekly put sale on price line. I can look at that for you. Just give me just a few moments. Weekly put sale. Let me put this into our worksheet over here. All right, 4/27/15 target 84.85. 18 cents. It's a good premium. Okay, that's all the way in May. Regular May expiration. So we'll see what that does. Speaking of spreads, I know it's not a retail, but let's just look at Tesla really quick. Always talking about Tesla. Based on today's gap alone, feel free to look at and consider the 220, 217.50 May week 1 expiring this week, which is more than a 10% return. I think it's more than 10% returns because there's a lot of volatility coming in, a lot of volume, glorious gap, glorious candle. I like it. I mean, I do anticipate for it to pull back just a little bit. So I'm not going to be afraid if this happens. I think that will happen. That's kind of part of my plan. That's kind of in my head. I think it plays out that way. But the fact that we gapped right above that resistance level, gapped out of a flag, the trend on the daily is pretty strong. Great volume inside the Bollinger Band. If anything, we're getting something like this. But 220 is still below this candle low. So I don't think it's a gap and go. I don't think it takes out this candle by this week. But hey, we'll see what it does. Exponential moving averages is at 215 is the 10. So probably by the end of this week, the 10 will catch up. I like it. I'm in it. There we go. So there's Tesla. Any other retail you guys want to look at? Let's go look at JCPenney. Just take a quick gander at JCPenney. JCPenney's selling off a little bit more after it hit this resistance. Me and Richard Karasik and a few other traders, right? We wanted to do something with it, but there was nothing to be done. There's no bear call spread money up there, unfortunately. So, didn't do anything. Ralph Lauren. Ralph Lauren. So I had Ralph Lauren, I believe, as a bearish swing. Back on the 27th of March, we would have gotten stopped out with 1R loss on Ralph Lauren as a bearish trade. Ironically enough, because Pat's really wanting this thing to go bullish. I think she's been in it for a while. So here's the weekly chart on Ralph Lauren. And it is at a support. I guess what I would love to see is something like this. That's what I would like to see. Some type of inverted head and shoulder pattern. We are trading into the 10 exponential moving average on the weekly. Got a gorgeous, glorious pennant pattern right there. It should roll over, should continue. So I guess we'll just kind of watch and see what it does. But I guess kind of patient on it. If it breaks out that pennant bearish, I would probably try to do a bearish trade once again on Ralph Lauren. Otherwise, it's at a pretty strong little support level, and it very well could bounce. Let's go see what stochastics are doing. Stochastics. On the daily, they're still trading down a little bit. We did have some divergence right here on the stochastics on the daily chart. That's really interesting. So we'll see. Yeah, that's about it. Anything else you guys want to look at? TJ Maxx maybe? So TJ Maxx, exponential moving averages. So this is one that I think just really to the penny closed above a trigger on TJ Maxx at 70.41. Then the very next day just started retracing, and then you got into a protective put. Trigger at 68.22. And then it just kept going down. We just got a little bit of a rollover, and now it looks like we're making some lower lows and lower highs on TJ Maxx. So you are likely, as of a week or so ago, out of any bullish position on TJ Maxx and holding your protective put, which probably expires either in May or this week. So don't hold this one too terribly long, but TJ Maxx actually looks a smidge bearish with a breakdown out of that little triangle type of pattern. It's obviously a false breakout. Trade down, trade up into the 10, and now we're getting a little bit of a rollover pattern. So TJ Maxx, I'm sure, trapped some people because it trapped us in our analysis. Likely, 63.85 is the next target on TJ Maxx. So it depends, my thought, I guess. When do you have earnings? When is earnings around? 527. So depending on your expiration, right? Depending on the expiration of your option, if you can hold it down to that 50 exponential on the weekly chart, which is about 63.85, which also kind of coincides with some of the support level in here, I think that's probably the best way to do it. And just kind of take it from there on TJ Maxx. Home Depot, I'm really excited about a Home Depot pullback. I've been waiting for a Home Depot pullback for a little bit. Today we have a pretty decently sized bearish candle. Looks like we're closing below the 50. Paige, what are your thoughts on this one? Are you going to try to play it bearish, or are you just waiting for the bullish pullback on it? Because the trend has just been so strong. Got a little bit of a pattern like this. It's kind of a weird looking triangle looking thing. We're about to close below the 50 today. And other than when it did it back on the 17th of April, it's really the first time in a while. So I think it pulls down a little bit. Kind of anticipating and expecting it to just a tad. So the 100 simple on Home Depot is my next target, 108.98. In which case you can buy the bounce. Now, does Home Depot make it all the way back down to here? I doubt it. And down here is about $100. So yeah, so Paige, if you're thinking bearish, I see it. I mean, you got some support right at 112 where we're at. Looks like we might close below it. So this reward for this risk isn't sensational. Right, it's not phenomenal. So I wouldn't trade it directionally bearish. Maybe a very, very short swing trade potentially. Or maybe keep an eye on it for a day trade. Bearish. Otherwise, probably just wait for some type of bounce. There we go. Got my fibs. I'll take my fib levels. Ken says, is that lower wick real? Yeah, it is weird. It is real, to my knowledge. Yep. I think it is. So there's some interesting flash, interesting buying pressure. So yeah, if it comes back into the 100 and does something like this and bounces, I think it's a nice pullback. It will be a longer term trade. So pull back, I'll probably do something like this, and it'll be a slow, arduous process higher. If I did a wave count, I could count as a 1, 2, 3, 4, 5. We'll see what it does. Good stuff. Good questions. I like it. Arthur said, what would be considered a fake wick? Something that the data's not correct and that did not actually get a bid or ask down there. Some charting softwares can get a fake data sometimes from one of the exchanges. Any other retails, ladies and gentlemen? I got a few written down that you guys requested. Arthur says, what is your opinion on that AMAT wick? Well, first and foremost, if you're in this trade right now, awesome. I'm just going to look at this on a day trade. I know we don't look at day trades until later, but let's just bring this one up. This is the wick that Arthur's talking about. I was not watching it when it happened, Arthur. And ironically enough, depending on how you had your stop, I believe it's topped out most people. I think that that's a fake wick. I do not believe that's real. And what I mean by that is, when I say fake wick, is the stock did not actually trade up and then trade down on that candle. It was trading and then went boop, boop, and went right back down. So Arthur was in the trade and Arthur did not get stopped out. So I don't know. Yeah, I'm not really entirely sure. For those of you who are in this trade, let's just go ahead and take it down. No, it didn't work. As much as I tried to make that work, it didn't work. Let's take it down and let's put the stop at the target of 1984. Go ahead and lock in 2 R's minimum. Worst case scenario. But yeah, I don't know if that happens. But yeah, that's what I consider a fake wick. A wick that did not actually trade to that level at any point in the day other than a 1/4 of a second flash. Which is always kind of a confusing thing when it happens anyway. Right? So here's Home Depot. Home Depot, so go back to that level just so we can look at it. And yeah, that lower wick right here, I don't think that Home Depot actually traded down to there, Ken. I do think it traded down to here and had some type of weird flash, but yeah, I don't know. Not entirely sure. Weird when that happens. I'm still trying to get, I think that this is, I'm sorry, now I'm going on a little bit of a tangent. TradingView has this thing now where you can report data issues. Let's see. Price incorrect. 12/18/2014 candle on the SPY has an incorrect upper wick. And you can send that and they can find out if it's a real or fake wick or not. If there actually was it, but if it's on everyone's computer, then usually it's some type of flash that's a false flash. So it's interesting. Interesting how it works. Okay. Let's go look at a few that you guys requested in class. And so remember, I do have a few of you guys who are brand new. This program runs entirely based off of your your generous support and also your stocks you want to look at. So if you guys ever have a question or want to look at anything in particular, feel free to. We're going to go look at DDD because DDD, we talked about a $28 put sale for those of you who want to own shares. And ironically enough, on Friday, had this random gap down, and it closed on Friday at 27.23, which is bearish. Then today's gap down again, trapped anyone who did try to buy as a buy the bounce on Friday. And we're making a lower low and a lower high. We're actually in a 52-week low, and I think like a 104-week low. I mean, we haven't been this low in a year or two at least. So here's exactly what I would do. So we have a 46-cent limit. 28 put sale. So that means your dollar cost average is $27.54. $27.54 dollar cost average. Going to implement a collar. DDD looks quite bearish today. Therefore, I will buy puts and do a do a closer covered call. And that's really about it. Analysis on 4/27/15. So here's what I'm looking at. So let's say I know Cheryl and Pat did it both virtual, and Pat has already exited, so she's out. And Cheryl, I think, got put the stock, and then I know it was virtual. She was practicing it. So here's what I would do again. Let's say this is your money. You want to own shares. What would you do in DDD? Right, trying to buy the bounce, trying to pick the low. We're gonna come over here to options and do a 28. Let's come over here. I'm going to do a June 28 covered call for 81 cents. Because if you get exercise there, it's for a profit. Since your dollar cost average is less than 28. Let's come over here, covered call. Format is exactly what I would do. Again, if the stock is going down, you don't want to be in it as long as possible. So you're doing like an at the money covered call, more or less. And then I would do a May put, a May 28 put, and see what it does from there. So here's your May 28 put is going to cost $3.05. I don't know how to write this in. I think I'm just going to write that in the box. That'll make it easier. Sold covered call for 80 cents and will buy the May 28 put. If DDD continues lower, could exit all positions at May and take the small loss. But again, if it continues lower, you have the right to sell your shares at 28. And or you can continue to own shares and roll it up. So we're looking at, if it continues lower, that's what puts it there for, to protect you. So we'll keep an eye on it. On DDD, when we looked at it for a day trade, here's the 5-minute. And truthfully, I did not take this trade. I just felt it was a little extended, but I know 2 or 3 of you guys wrote in who did. It was bearish right here, and then the stop was right here. But do you guys remember what I did mention about that move? I was like, it's very, very extended. Let's wait for the retest. There's all the retest right there of that bearish entry. So you absolutely could have had the opportunity on DDD to lock in some of that retest. And then, man, if you did, that's a phenomenal 3 or 4 hour afternoon trade on DDD. So great gap. Look for DDD to continue bearish, I guess is kind of what I'm saying. DD. Just 2 Ds at this point. Decent gap today. Kind of looks like an interesting double bottom type of pattern off of the 200. Something like that. So let's see if we can close above, really we're close above here, 73.40, which I think we will. And if we close above there, I would say on DD, let's buy the retest, more bullish than bearish. Analysis on 427.15. So something on DD like this, right? We're above the 200 and 100, a little bit of a pullback and then bounce. Consider that this is a retest gap, so that's likely we're going to come to retest on L DuPont. And do that. We shall do that and see what it does. But it looks slightly bullish. Slightly bullish. Good volume, good candle today. 75.61 is a resistance. We mentioned a while ago that on DD, kind of back up in here, that we'd want to buy the bounce off the long-term moving averages. For those of you who got the opportunity to do that, looks good. So looking at SSYS, this is also very similar to DDD, in which case you're just breaking some really, really interesting support. So there's an end of day trigger, as I would have it, would be there, and so we would get triggered in today, and stop would go above that black candle. So on SSYS, if you don't get triggered into that particular trade, you absolutely could wait for some type of smaller retest. So if something like this happens, and like this, and like this, and a little bit of a rollover, but that looks decent. That's right at $5 of risk. So here would be target 1 on SSYS. And we would just be, more bearish than bullish. So either, depending on what you like to trade, the retest or the breakout, both DDD and SSYS do look a little bit bearish based on Friday's gap. And then also based on today's gap. So there we go. That was one that was requested in live today's class. Let's see here. Baidu. Let's go look at Baidu. So Baidu, just as an update, we had the Iron Condor expire profitable last Friday, which is great timing because today it did get inside that $220 to $50 range. This is an interesting gap, to say the least. And what's interesting about it is that there's a lot of resistance right here that we did get above and kind of close above. So here's your support. So great Iron Condor, by the way, folks. That was a phenomenal one. Really good timing, just good all around. I liked it. So on that particular Condor, that expired worthless, and Martin Reyes, your bull put spread down there, expired worthless. So good stuff. So had I normally been looking at this, I would want to close above 222.05. That would have been the end of day trigger. Doesn't appear that we're going to close above there. So here's what I would do on Baidu. I'm going to kind of keep, especially for Wednesday, nice retest gap. If Baidu can close above 222.50, more bullish than bearish. If Baidu rolls over, could consider a bear call spread. Earnings is something to keep in mind on Baidu. Baidu 429 says this week. 429. Could consider a bear call spread. Okay. So we'll see what it does on earnings. We will see what it does on earnings. So it's right around the corner. Resistance, support. It's sideways. We'll see. See what she does. Any other swing trades you guys want to look at? I have KOS. I'm going to look at that one too. Anything else by any chance? Possibly. Anything you guys want to take a peek at? American Express, alrighty. American Express, there's a lot of buyers on American Express on this day, 422. This gap is bearish though. And based on this gap, American Express, in my opinion, should continue a little bit lower. So if we do close below 76.40, it's the end of day trigger, I'd be slightly bearish on American Express if we close below there. And my stop would kind of be right about here. 78.83 in that gap. What would be nice is if American Express traded sideways for a little bit and then triggered. But guys, this is a kind of a bearish gap. And this is a really, it is a good buying location on American Express, right? It's a longer term channel, the whole buy and hold thing. It's a good area. But this gap is saying that, you know, hey, I'm a little bit more bearish than bullish. Just a tad. I think we need to respect that. So, since we're at a support, we got a gap. It's a strong support. If that gap breaks, it's a pretty bearish sentiment. I think it would be fun being in that situation more bearish than bullish. What do you guys think? That's what I got. And that's how the cookie crumbles. Dustin. I don't know who Dustin is. So there you go. There's American Express. Microsoft. Now on Microsoft, realistically, guys, beautiful, beautiful retest gap. Any kind of put sales or bull put spreads you can do in this area, awesome. Just clear the pivot, so beautiful. That was just a phenomenal trade on Friday. Really, really fun trading that guy. Retest gap. Keep in mind the 200, 100 SMA. Nice for put sales potentially. But any retest and bounce off the EMAs is bullish. So there we go. There's Microsoft. So we'll see what that one does. I like the candle. I like the volume. It looks nice. So that's that really is Microsoft. There's a lot of congestion up here for a directional swing trade right now. So I'm thinking Microsoft does something like this and then bounces. I don't know how high it goes, but right now I would be doing, if I was doing this, some put sales down in this area right here. $44 put sale. We got some double gap action right there. So good volume, a little bit of rotation, and we'll see what's going on. I will say this, and as my grandma would say, by the skin of your teeth. Two things I want to give you guys an update on. So Dan Walsh, a good buddy of mine, he did do the $70 strike price that expired last week for 30 cents on MYL. So that was beautiful. And on Friday, the high of the day was 76.68. So I said it was going to reach 75.76. And it reached 76.68. So therefore, ladies and gentlemen, I'm so sorry. We're going to have to wait for another opportunity to wear a dress. But that wager has been accomplished. Yay! Go, Jeremy. So it's something to keep in mind. There's still a good wager out there. So Dan made a little bit of money on that wager because the $70 put sale did expire worthless and earnings are in May. So we'll wait on MYL for the moment. The other wager that's out there, we're going to talk a little bit more tomorrow, is Netflix. And here it is, the Netflix wager. Talked about the analysis of a 5-10 May week 2 put sale, a dollar limit, and I will grow Jerry Mungo sideburns if Netflix trades below 530 before May 15th. There you guys go. All right. So those are the two other existing wagers. Let's go look for a few gaps. Obviously, we talked about Apple. So for my day traders and shorter-term swing traders, on AMAT, if you did get trailed out at 1984, beautiful. Great job. Smooth move. If you got to take, a chance to take a quarter, I don't know how you would have picked that low specifically other than maybe doing a fib or something. But good trade, guys. I mean, that's 2 R's. Actually, just a smidge over 2 R's. My P&L. It's about 2.1 R. So on AMAT, you could have paid for the trading room with that one trade for the entire month of April or May. Just a $50 R, not that bad. Let's go look at for a few other gaps, and we'll see what we can do. So we got. Oh, give me about 3 seconds. Something's going on. Can you guys still hear me? Okay. Tell me if you can hear me. Tell me if you can hear me and see my screen. I got like this weird error. Okay. Yeah, I don't know what that was. Sorry. So let me go look at KOS for my boy Ufredo. Here's the 5-minute. So as of right now, there we go. We trade sideways. Perfect. So I don't know if we're going to trade this today. I don't know if I would take this with 10 more minutes left, Ufredo, but maybe if you're doing a shorter term swing trade, you could consider that as well, or maybe just keep an eye on it for tomorrow to day trade it. If it breaks 945 tomorrow, maybe just keep an eye on it to day trade. Yeah, that's probably what I would do because it looks like a head and shoulders pattern on the 15. So KOS, as far as the swing trade's concerned, because I was also kind of looking at this one a little bit as well. It has a good candle and a good volume. Was today earnings, I guess, is my question. KOS. 5-4 confirmed, so earnings are approaching. So we got the candle in good volume above the moving averages. This really is a strong resistance on Cosmos Energy. Right about here. $9.21, give or take. So with earnings on 5-4, we might not be able to enter a swing trade at least at this exact moment in time. But I do like the candle. I like the gap. I like the location. You know, you're getting something like this, higher lows, relative highs. If it does pull back and gap nicely on earnings, Ufredo, that could be a pretty good bullish gap. So maybe one to keep an eye on as well. A lot of things reporting earnings tomorrow. A lot of things. So let's go look at SWFT. What is that? Swift Transportation Company. Here is some support. Let's look at just the candles. I like that support right there. That would be a good gap if we gap below that level. Resistance at 29.21. And really some resistance right here where we paused. Right about there. So here's where I want Swift to gap. If SWFT gaps below 24, more bearish than bullish. If SWFT gaps up above 27, more bullish than bearish. Okay, there we have it. Text me on that, Dan, if you want. So there's Swift. What else is gapping? JetBlue. Looks like we got a few transports gapping. JetBlue. Wow, this one moves long. If one is long, that appears to be the edge. Sweet. Put sale expire. We obviously haven't looked at JetBlue in a while. JetBlue is in a very interesting trend, and this is one of those guys based on the trend alone that a gap down would probably be pretty bearish, depending on where it gapped to. Really, really strong looking angle, right? Strong looking angle. It appears that this fib's a little off. Let's see if we can move it to here. That might be it. Okay, there we go. So here's what I'm thinking on JetBlue. If we gap down below 1784, if JetBlue opens below 1784, more bearish than bullish. If JetBlue opens above 2020 and below 21, very bullish gap at open. If it opens too high, might look for a fade. Because really this trend is so strong right now. If it opens up to like right here, and this thing was at $10 in October. So it's $100, 100% return on a stock, like a serious company, since October. So if someone adds on, they're at 130, 140% return, you can more or less believe your biscuits they're probably going to sell. Especially if it gaps up to 2266, which is apparently a little bit better of a fib resistance or a fib target. So JetBlue, looking nice. UPS has earnings. Oh, man. UPS. What is UPS going to do? UPS. I don't know. This looks interesting, guys. What do you guys think? It's still kind of a bearish maneuver pattern looking thing up in that level. I'm kind of thinking if it gaps below that support. So, what is this? If UPS opens below 93 and some change. I'll put 93.43. More bearish than bullish. If UPS gaps up, could consider a longer term bullish perspective. So what I mean by that is if it does actually gap up due to earnings, this is such a strong support at 94. No, I'm going to put 94. Yeah, just 94. Okay. So this is very, very strong support. So if we like gap up to here, let's say 98.70 or something, maybe a bull put spread, maybe a put sale, maybe you want to own shares longer term. Whatever the case is, just keep it simple, keep it easy. If it gaps down though, this was and is a very, very bearish gap. I'm happy that apparently, I don't know if type in a 1 if you guys remember me being on the morning trading show when that gap was occurring. I think that was my second time being on the show. Maybe first or second. But it's fun. I'm honored because Joel, that's how he remembers me apparently, is that call. Every time I come on the show, he still flips out about that. Was it the first time, Colleen? Okay, I knew it was either the first or second. But he emails me every now and then. You're asking about these gaps. He's like, how would you play this? He has such a radio voice too. Such a radio voice. I'm Joel. And this is... So it's a good guy. But anyway. It was, how could you not be bearish? There's so many people being trapped. Anyway. I don't know what it does, right? So if it does gap down, I'm basing the bearishness from that gap. You know, if it gaps down right to 94, I'd actually be kind of bullish. Not massively so, but a little. What else is gapping per reports? You guys are saying, oh man, there's so many. BMY and Pfizer, those can always be fun. Okay, let's go check out Bristol. I was about to say Brigham Young is what I was almost said. I didn't actually say it though. I almost did. Bristol Myers. I got a great gap strategy for us on this one. This one's going to be great if it happens. Don't know if it will. Below this candle, 61.18. If BMY opens below 61, short as soon as it opens. Watch the 1 minute. Watch the 1 minute. That's going to be a bearish gap if it happens. If BMY gaps up, gap was going to be, let's say the high of this day is 69.20. Oh, let's say 69.50. Above 69.50. Pretty bullish gap. Anything else? Any other gap will likely be Yawnville. There we go. Pat says also PFE and MRK with BMY tomorrow. The pharma reporting day. Wow. That is a lot. Jeez. That is a lot. Ken Freeman's been in for a while. 35 covered call, April. So that expired on the 17th. And it was at 35.04. So Ken Freeman, I don't know if you're here right now, but can you let me know if you took your exercising? Let me see if I can find. What's up, Gaston? Fred's in the house. What's up, Fred? Glad to have you here, brother. I missed you. It's good chatting with you the other day. All right, no, Ken Freeman's not here. So Ken, if you watch the recording, let me know if you did get exercise. I'll leave that on here in the meantime. Because if you did get exercise at 35, good for you. Great profit, man. Let's see what Pfizer does. Pfizer, I would only really be super excited about Pfizer if we gap below If PFE opens below 33.40 or gaps of 35.60. 35.60. So there's going to be a lot of pharmacies or pharmaceuticals tomorrow. So Ken, good job. I'll leave that. Yeah, I'll leave it on here for right now. So kind of below this support, I would really like it to just open right above, somewhere right around there. If it opens above 35.60 but below 36, that's probably going to be a perfect gap. One that I would absolutely keep my eyes on as long as possible. So there's Pfizer. And last but not least, let's look at MRK. Maybe we can, how quickly is Apple going to come out with this announcement? Is it going to come out like right now? Because if so, we might talk about it. MRK, I think the only trade I would make on MRK is if it opens right there. 55, 54, something like this. Somewhere in that range is probably the only place I would trade it. Oh, it's doing it at 430? Okay. Well, folks, it's been a great day. Tomorrow's going to be very, very busy. Very busy. If you need any help or have any questions in the meantime, feel free to email me. Let us know how real-life trading can enrich lives. But tomorrow morning is going to be the morning floor with Brad Reed. Probably going to be a lot of good gaps tomorrow. It's going to be a fun day, ladies and gentlemen. I appreciate you. Jay says, thank you. My pleasure. You're absolutely welcome. Marsha says, good luck on that dinner concoction. Yeah, I'm about to go find out right now if that's going to be a horrible mistake or decently good. I'm not sure which one. Otherwise, ladies and gentlemen, I'll see you tomorrow. And until then, remember, love life, live life, and trade it. See ya.